It feels like this could be getting pretty close to the end, and maybe the gains we have seen over February, March, April do kind of flatten off a bit and maybe go into reverse.
Goodall and welcome to the New Zealand Property Market Podcast, brought to you by Cotality for the 4th of May 2026. I'm Head of Research Nick Goodall, and I'm joined as per usual by Chief Economist Kelvin Davidson. Kelvin, a bit of reason for optimism in the economic data today, which we'll chat about a little bit later on. But first, our home value index for April went out last week. How did the release go with that, mate? And what were those high-level results like?
Yeah, so I mean, gee, it was another pretty flat month, really. I mean, the national median was up a huge 0.1% in April, so definitely still within the error margins. But I mean, it is technically the third monthly increase in a row, I should say. We had 0.1% in March and 0.4% in February, so you add that up over 3 months, it's some kind of growth, but still pretty modest. And I mean, most of that came in February, which is a few months ago now. So I think really we're still looking at a pretty flat market. I mean, Auckland and Wellington were down ever so slightly in April. Markets like Christchurch, Dunedin up a bit more, and Invercargill's still rising. So there is that regional variability underneath the surface. But yeah, when you look at that national number, it's still pretty flat. And this it does relate to April technically. It's the Iran conflict sort of kicked off in early March, late February. So, maybe there's a wee bit of sort of underlying resilience there in the property market. You'd think maybe the effects of that Iran thing would be starting to come through in April's numbers. But, there's lags in the system. It's like we talked about probably a month or so ago, I guess. It's not like you suddenly put your home buying decision on hold just because of well, not just because, maybe that's not the right phrase, but with Iran, you're probably still going to carry on and do what you always plan to do. So it may just take a little bit of time, I guess, for those full effects to come through. But yeah, what we're seeing now, mortgage rates are sneaking up. Some economic indicators are weakening, as we'll talk about. Some are still looking a little bit stronger, but I mean, there's been a sharp fall away in business confidence, consumer confidence, based on, say, the ANZ indicators. So it's probably only a matter of time until we see it flow through to, I guess, the more sort of formal or harder economic stats. In the meantime, yeah, there are other things going on. We know we're going to have inflation pressures. We know we're going to get an official cash rate increase at some point, maybe sooner rather than later. So, yeah, I think this could be it sort of could be the last increase. And technically, it's an increase. It may not be that big, but it feels like this could be getting pretty close to the end, and maybe the gains we have seen over February, March, April do kind of flatten off a bit and maybe go into reverse. So, yep, still a bit of growth there, but it's pretty small, and we know there's going to be some weakness coming up, you would think.
Yeah, that seemed to be the way that the journalists took it too, was, effectively, from this point on, it's going to be flat or declining values for the rest of the year, is the way they seem to take the data and the commentary from the release itself. And I think that's probably fair too. Like, I certainly wouldn't disagree with that interpretation. Kevin, I just wonder, I don't know if we've talked about this much as recently. I just wonder if we just hone in a little bit on that weakness in Auckland and Wellington. I know that we've probably covered it in the past about there is this division between sort of the larger centres, some of those regional centres. There is a pretty strong correlation with the economic setups of those areas too. So I wonder if we just want to, I don't know, go into a bit more detail, whether it's about the data itself or, when someone asks you, why is Auckland and Wellington, not doing quite as well as even some of the other main centres like Tauranga or Christchurch, let alone somewhere like Invercargill, how are you answering that as well? Like, what's the detail you give when you say, why are these larger centres just not performing as well as, say, those other ones when it comes to value growth over time anyway?
Yeah, so I think the shape of the economy is definitely going to be part of it. With say farming still going pretty well, that's going to feed into a market like Invercargill. Maybe not quite Christchurch necessarily as such, but that wider Canterbury region, still farming's a big thing. So I think that's probably propping up the Christchurch market to some extent. Whereas I mean, Wellington's not going to benefit as much from farming. Neither's that sort of Auckland market. Yes, there's farming around Auckland and Wellington, of course, but it's probably not going to be feeding into those economies as much. It's much more a sort of services-driven economy. Financial services, retailing, these sorts of things, and we know that those parts of the economy are not as strong as farming. So I think the shape of the economy is part of it. Auckland in particular, we know, has had the big supply pipeline, and you would think that that's going to be restraining values, supply and demand. For an economist, that's convenient that seems to be working. With when you add a lot of extra supply to a market, you'll probably see relatively flat house prices. I think that's a factor in Auckland, not only I guess from a physical stock perspective, but the listings. I mean, that stock of available property to buy will be higher too. And yeah, I mean, I'm not 100% or not as sure of the supply situation and what in that wider Wellington market. I know there's been sort of townhouse development, lower Hutt, maybe into upper Hutt, certainly lower Hutt at least. So supply probably plays a role there, but then also just this, it's a confidence thing. It's hard to sort of measure. It's not necessarily something you can easily put your finger on, but you sense that there's a different vibe between, say, a Christchurch where there's lots going on. We know all about the sports events and everything. Whereas, you walk down Lambton Quay, the mood feels maybe not quite as good. You see empty shops and probably the same around sort of central Auckland too. So yeah, a combination of, I guess, economic health, supply of property, confidence factors. I think those sorts of things are going to be explaining those differences. Now, they're not at the moment, I mean, Christchurch might be up slightly in a given month and Auckland's sort of down slightly. The gaps aren't massive, but yeah, I think over time, those things will be playing a role. And I guess just in those slightly different paths for say, Auckland and Wellington versus a Christchurch or Dunedin. So I think those are factors. But of course, on the flip side, it does mean that housing affordability has been restored to a large extent in a market like Wellington. Certainly, affordability looks a lot better than it has done for a while, and Auckland too. So, these things are always going through cycles. Yes, it's a softer period at the moment for Auckland house prices, for Wellington house prices. I'm really keen to avoid saying whether that's good or bad because it depends on your perspective. But if you're somebody who's starting to look for value, well, yeah, values might not be rising at the moment, but of course the flip side of that is affordability is looking a lot better, and at some point you would think that would sort of drive a bit of growth. But yeah, so there's always those cycles, and so that's my sort of standard answer. There may well be lots of local things which we're not necessarily aware of, but yeah, from a top-down perspective, those would be the things.
No, for sure. I think it's well summarised. I think that's just leads into why I've been sort of saying for a while now that, with that improvement in affordability, and you look at, I think even rental affordability in Wellington's really attractive right now. So does that attract more students or, people starting out jobs if they can find that job, of course, because rental affordability has improved. We know housing affordability has got much better too. First time buyers are pretty active across that broader Wellington market, I think, because that affordability is there. So once you get that job, you can actually see that it's pretty beneficial to be somewhere like Wellington. And look, again, it's more anecdotal. It's from me being on the ground, but I do feel like, while, yeah, of course it's not great and there are some, more stores shut down and stuff, there's been a few events in the last couple of months where Wellington's been packed and it sort of felt like it's trying to get going again. Now, I'm sure that's not across the board, and there's going to be some people doing it tough out there, whether they're small business owners or low income earners, and there's going to be a wide divide of how people are feeling right now. But there are certainly some reasons for positivity, I think, in that Wellington economy as well. Some things have started to get going, so it will be for pockets, but I do feel like it's not all as doom and gloom as everyone sort of talks, even from an economic perspective. But it's also partly the reason why I've been talking about, we now have those settings. Affordability has improved so much that, once we do see, I think, especially an improvement in job security and a reduction in unemployment, and that labour market starts to improve and it comes back to that confidence again, like you talked about, then it feels like once that comes back, that's sort of the final, box to check to start to see the market broadly improve. And I take your point about improvement depends on which way you're looking at it. But let's say, it's an asset and most people want to see that asset grow, then that's an improvement. But of course, taking into the point that, not everyone wants values to increase, especially if they're not yet in the market. So, I think that's why it always comes back to that job market for me. And that's where I think absolutely why Wellington suffered more, because that market has been more, weaker and that's partly real and partly on the face of it, with obviously a right-leaning government reducing their investment in government as well, which has just kept more people on tenterhooks, right? Even if you keep your job, you're still not that keen to go and make any major life decisions, whether that's house buying or items for your house, or a car, or whatever it is. Those other big things which help to drive the rest of the economy, but especially for all those small businesses that exist that we know need us spending. So I think that's where it all ties together for me. So from an economic perspective then, Calvin, I touched on earlier on that we've seen some actually relatively positive data. Now, I know there's always going to be a timing issue here, but even then there's a kind of surprise to the upside. I don't want to get carried away and suddenly, what was that word we used a while ago, the hopium here, that we just cling to every little bit of positive data that our economy is actually doing better than maybe it otherwise is. But I do want to acknowledge the fact that there is some resilience in our economy. There is some resilience in our jobs market. And we saw that last week with a couple of releases pertaining to March data. So that was both the New Zealand Activity Index and the filled jobs data. The filled jobs data, maybe you can touch on first. I know we've got official labour market stats coming out this week for Q1. So we'll see unemployment and where that's at. And that could give us a feel for, what that trajectory might look like for the year. I know there's always the, uncertainty of, depends how long the war in Iran and the Strait of Hormuz is closed and everything goes on. But if we just take a broad perspective of that and what our expectations, this might shape our expectations for that labour market and the broader economy. So maybe you want to take us through those two key data sets, the release for March, how it shapes up also our expectations around GDP for Q1, because the NZAC, of course, does give us a feel for the economic activity. And now we've got the full 3 months data. So, I don't know, filled jobs data, NZAC, preview the labour market stats, and even Q1 GDP. I know that's a few months away, but give us your broader economic take on those results.
Yeah, I mean, the filled jobs numbers, I'll probably start with those. I mean, up 0.3% in March. So it's a decent increase. You annualise that. It's probably not the greatest thing to do, but if you annualise that, you're looking at 3.5%, 4% growth on an annual basis in employment. That's pretty good. So it wasn't a terrible number, and particularly since we know that the conflict kicked off late February, early March. So this is kind of technically a month where maybe you'd expect to start to see some sort of impact, potentially, but it was still up 0.3% in terms of filled jobs. So, it was an encouraging number. I guess these numbers, the big caveat is they can be revised, and then they tend to be revised down over time. So it's possible that 0.3% ends up lower than that. But still, at least for a start, that's a pretty good result. I suppose the thing about, everyone talks about the labour market and jobs being a very lagging indicator, and what they mean there is that, the economic cycle turns. It takes a while for it to sort of filter through, for firms to be able to be confident enough to start hiring again, or to feel like they really want to turn their plans around to start pulling back on hiring. So, there's always that sort of lag in the system, and possibly, this could be reflecting hiring decisions made, in December. It takes a while to fill a position, and, we all know the long process involved with that. So, it's not going to necessarily react straight away to a turn in sort of confidence and that sort of thing. So, it's good. I mean, I perhaps wouldn't necessarily get carried away about that filled jobs number, because we know it's probably going to be a little bit lagging, and it could start to weaken from here on, particularly since particularly the ANZ Business Confidence survey has a whole bunch of different questions, and in there it does look like hiring intentions have fallen away. Overall business confidence has fallen away a lot. So it could be that and there'll be lags again for that to actually flow through to filled jobs. But it might be that filled jobs don't hold up quite so well in the next few months. One thing that was a little bit surprising probably for me was that NZ Activity Index for March was up 3.2%. Now that's something, and that's the fastest growth in sort of 3.5 years, I think it was. So that's a pretty good number, particularly since some of the things that go into that are probably faster to move. It does take account of some of those confidence indicators. Truck index, I think, from ANZ, there's sort of 7 or 8 measures in there, which are kind of much more real time. And yes, it's comparing year on year, so partly it'll be reflecting sort of what happened, if you had a really weak March last year, which I can't remember if we did or not. But if we did, that would sort of flatter up the latest result. But all that aside, that was probably still a pretty decent result, given that some of the components of that NZAC are real-time indicators. So, yeah, I suppose I wouldn't necessarily get carried away about the field jobs number, but that NZAC was at least pretty encouraging. If you trace it through, and it's an annual change, if you sort of map it out and what it might mean for a quarterly change in GDP, which is what we all tend to look at, it could be that GDP is up sort of as much as 1% in Q1, which would be a really good result. That's stronger than most expectations, to be fair. I mean, if you look at things like the RBNZ Kiwi GDP measure, I think they're sitting at sort of 0.5, 0.6% for Q1 GDP. So 1% is probably a wee bit overstated, but it does sort of highlight that idea that Q1 as a whole probably hasn't been too bad in terms of economic growth. We all know we'll see how it plays out in Q2 and beyond, and we won't get the Q1 GDP number till, I guess, I don't know, sort of as a mid to late June, something like that. So it's still a wee way away, and of course it's always in the rearview mirror, even more so now, given that this whole Iran conflict's continuing on. But so yeah, I guess you take your positives where you can, and I mean, let's face it, a rise in field jobs is better than a fall, and NZAC is good growth in that is better than no growth or going backwards. So yeah, you take it positively, but at the same time, we know there's going to be some things changing in the next few months. So at least Q1 might be okay, but yeah, potentially Q2 might maybe not quite so good, but we'll wait and see.
Yeah, I guess, you want to cling to all the positivity we can. And yeah, the stronger it was to start with, hopefully that means we've sort of got that more robust economy to continue on when the disruption has been around longer. I think that, I think your words are right in terms of, take it, be happy with it, but don't get carried away. And I think that, it's almost also around that point about the data being lagged and some of the data not turning around as fast. I also wonder if, people were still spending and acting in March on the expectation that as much of it was uncertain, and knowing that Donald Trump was involved, that we didn't really know what was around the corner and how long this would last. I suppose there was still probably greater hope or expectation in March that it would be relatively short-lived. I mean, the longer it went, now you go, when is it ever going to end? But I think maybe early on there was that kind of cautious optimism that, look, surely we're not going to see so much disruption. They've shut the strait. Everyone's seen the disruption of oil not being able to get around the world and gas and all these sort of things. Surely even Trump's not going to let this continue on forever. And maybe that meant that people continued to act and think, there's not going to be so much disruption. And when you think about the messaging from the government around, wasn't much rationing of oil supplies or petrol supplies either. So they were trying to portray that calmness as well and keep going, keep acting, it's fine, we're all under control, we've got enough stocks. And so maybe it was that, in March, we did have that kind of feeling of, it's disruptive, it's annoying, we don't like seeing that higher price in our petrol, but ultimately we're going to live a life and we're going to continue and it'll end at some stage, and we can't just be fully changing our life. So I wonder if that was the case. Now we're into, May, we've had another month of this, and again, even though you read headlines of, the thing's going to end soon, we're going to see the fact that there's a proper ceasefire. It's not only a couple of hours later or a day later when you hear about, but if we want to, we can still take them to town. It's just like, it does feel harder to see the resolution these days, and maybe that is going to continue to weigh on people's actual activity, not just the sentiment, right? Because as you said, you look at the ANZ business and consumer confidence data for April, so a much more recent read on that, and it has tanked. And so people don't feel great about the future. Hopefully they say it's not great, they're not investing, but they still end up spending in the reality. But I suspect the longer this goes on, the more those two things will be aligned. So that's obviously not great. But I guess, we'll continue to celebrate the wins where they are there. Any good signs of our robust economy, a stronger labour market has to be good. And on that note, we did also have continued growth in dwelling consents for March as well. Now, again, that rate of growth has slowed down, but it still remained positive. So again, there's maybe some signs of that construction industry, slowing down, and that this is hitting them. Of course, we know their costs will have increased. In many cases, we've heard they're having to shoulder that cost themselves rather than pass it on to consumers, especially if demand is reducing for their buildings as well. So, again, positive news, but we know it's probably, going to continue to dwindle down, and that rate of growth will slow down as well. So, I just want to touch on that one as well. Was there anything else from the economic data or consenting data you wanted to touch on? Otherwise, I thought we could just look ahead to what's coming this week.
Yeah, probably just reference into the Q1 labour market numbers that we're expecting out. off the back of filled jobs. I mean, most expectations this week is that the unemployment rate stays about the same, 5.4%. Those numbers will be out on Wednesday. So that's kind of reflecting, yep, there's probably going to be a bit of jobs growth, but we've also had a bit of population growth, and the sense that maybe more of that working age population, a higher proportion, are now in the labour force because they might have been, I see there's a bit of job creation there. Maybe I've actually got a chance now of getting a job, whereas previously they might have been a little bit discouraged. So, yep, there's been a bit more demand for workers, but there's also a few more workers available. So maybe that unemployment rate stays relatively steady at 5.4. So that's kind of what the expectation is. The only other thing around, I guess, the Reserve Bank, second round inflation, all of these things, part of that ANZ Business Confidence Survey talked about how if you look at some of the real detailed indicators, some of the hiring intentions have come down. Doesn't look like the wage, I mean, it's early days, but it doesn't look like the wage demands or sort of wage inflation are necessarily a big issue yet. So, it's a small thing, but the Reserve Bank might look at that and go, okay, great. We're not really necessary, because keep in mind the second round inflation is all about higher inflation expectations, about people wanting higher wages to compensate for that, and then it becomes sort of really embedded in the system. Nothing yet necessarily in those ANZ surveys around those things becoming problematic. So, yeah, a couple of indicators there related around the labour market. Probably seeing that unemployment rate hold steady, and also just the signs that we're not necessarily seeing second round inflation come through yet. It might be too early, but at least the Reserve Bank might take a wee bit of reassurance from that, gives them a wee bit more breathing room. But we have to wait and see sort of how that plays out. And of course, on the flip side, I mean, you might say that's good news, but of course that does imply real economic pain. People aren't getting jobs when they previously might have. We're seeing higher unemployment. So, yeah, careful what you wish for. I suppose if you're seeing a reduced chance of an OCR increase anytime soon is good. Well, that's good for you, but also there is pain on the other side of that, which is less job creation, higher unemployment. So always trade-offs in economics.
That's the big question the Reserve Bank's got, right? Is how are they going to manage this appropriately, and to the level where they've got enough control anyway? Like, really, how much can they influence that inflation? How much can they really influence economic activity with the tools they've got in hand? And we might hear more this week as well. We've got the financial stability review also coming out on Wednesday. This is the one that they do twice yearly. This is sometimes where they choose to announce changes to the loan to value ratio rules or debt to income ratios. I sort of half speculated on that last week as to maybe that was an area where they could continue credit flowing while the OCR starts to go up. Now, I've got no idea whether that's something they'd even consider, whether it's actually going to, be something that might fight against inflation if they're letting credit continue on. I don't really know, but we might hear about it this week. If it's not something they're even considering, it won't even be part of it, I guess. Is there anything on your mind for that release that you'll be looking out for, Kelvin? Any assessment, I suppose, of the broader economic situation? How are they going to view this in the light of, New Zealand's financial stability, which is essentially what this is about? Yeah, what's your expectation around this release on Wednesday?
Yeah, I guess, it's always a wee bit backward looking, the financial stability report. As you say, they sometimes use it for announcing intentions or even changes around LVRs and DTIs. Sometimes it's not even an announcement. It's simply here we go, or here we go. It's not a pre-signal sort of thing. They just do it. I'm not necessarily expecting anything on that front this time around. Maybe, who knows? But I think it'll probably be more, the direct implications for the property market from this report might be pretty limited. It's more about, I guess, just that general chat around what this might mean for what the Iran conflict might mean, and higher oil prices, what it might mean for financial stability. Because this report's all about the banking sector, the insurance sector. Is there things they might be teasing out in relation to those sectors and in the long run stability? So there'll definitely be discussion about it. You'd be amazed if there wasn't. But it tends to be, I guess, a chat, a sort of highlighting of different scenarios. If this happened, we might see that, but we've stress tested the banks. We're pretty confident they're safe. So, yeah, it might come and go fairly quickly. It's going to be a weighty document, no doubt about that. There'll be a lot of pages, but it's hard to imagine anything new, I guess, is what I'm trying to say. We know what the Reserve Bank's been updating us in different elements of their inflation fight, and we've got the next monetary policy statement coming up sometime. I think it's late May. So yeah, there's that's probably the thing to look ahead to. I think the FSR could come and go pretty quickly, and certainly from a property perspective, I wouldn't necessarily imagine too much. But yep, I'll be tuning in anyway, checking it out at 9 o'clock. Probably get a AI to read it for me, and just see what that really big picture summary is.
Yeah, for sure. And I think, yeah, because we're all, kind of watching closely what's happening in the broader economy, it is going to be important from that perspective too. Actually, just popped into my mind as well. We did see an announcement last week, or an email kind of went out from the Reserve Bank talking about more transparency. And they're actually going to, I think, publish the vote of who from the committee votes which way, and with a bit of context around that too. So again, I suppose following through on their promise to have more transparency, and we'll get an even better understanding as to, which way some of the committee members are leaning when they're making their vote each time. So I suspect that'll be in place for the decision. I think you're right. It's May 27, I think it is, the next one. So yeah, we'll certainly look forward to that transparency. Otherwise, Calvin, the core release from us this week is our first home buyer report, which will be out publicly available on Friday. This is in conjunction with Westpac once again, mate. I know you've done the work to release that, and there'll be a special podcast released on the day as well. Anything you want to touch on before we sort of close out for here and maybe wrap up our personal weekends?
Yeah, there's some interesting little tidbits in there. I mean, yeah, great working with Westpac again. Satish there is really good. We're very much on the same page with, pushing ahead, efficiency, so we both deliver, and it's really cool. Yeah, people will be familiar with our buyer classification stats. We're putting them in there again around what first home buyers are buying, what they're paying, all these sorts of things. But what we can really bring that's different is the Westpac figures on age and LVRs, and there's some interesting things in there. Watch out for the age figures; they might surprise people a little bit. And the LVRs, well, we know from the Reserve Bank numbers that LVRs for first home buyers have been sneaking up, or more first home buyers are taking out low deposit lending, and that's definitely confirmed by the Westpac numbers. But yeah, some interesting little tidbits in there. I mean, as I would say this, I think it's a great report. Go check it out, and yeah, plenty of detail in there. So yeah, public on Friday.
Yeah, lots of granular data at different regional levels too. So yeah, do go check that one out. There'll be a media release to go along with it, and I'm sure all the usual media organisations will cover it, so you'll see all the headlines, but you can go direct to our website and check that one out. Once it's live, I will actually change our podcast notes so you can go to the link there. But otherwise, you just go to the website and you can go and download that one straight away. We're on the headline articles on Friday, so go check that out. But that'll do us for work, property, economic stuff today, Calvin. So if that's all you're here for, then we can leave you there, and we'll catch you again on Monday, though Calvin's other podcast with Satish will be out on Friday. But otherwise, mate, how was your weekend? I know you got up to Hanmer once again too with the family. Nice weather up there, I'm hoping.
It was, yeah, it was great. It was just really perfect. The Hamner Half Marathon was on, which meant there was a few more people in town, at least on the Saturday morning, than perhaps what there normally is. But that's good to see. Everything was buzzing. But yeah, great weather. We just did the normal things. Went to the pools, did a walk, did a bike ride. So it's sort of, it's pretty full on kids stuff during the day. It's quite hard to get that all fitted in, but once that's all done, kids are in bed. It's adult time. We had the league on, bottle of red wine, so it was perfect. It would cover off both bases. So stoked. I feel pretty relaxed this morning. So that's the whole idea, I guess, in the end. So yeah, that was great. How about yourself?
Making use of the holiday home, you got to enjoy that, mate. So yeah, good on you. Yeah, well, I mean, we started off the weekend with a good weekend from a rugby perspective, winning the Cotality Research Derby, I suppose, in Super Rugby, the Hurricanes versus the Crusaders. But yeah, took the three kids along to that, and they sort of had the special light show at halftime, fireworks and light show, a couple of songs and whatnot. So yeah, hugely entertaining. So that was good, and the kids really enjoyed that one. So I think the Canes will do well to lock that in for a yearly one, or even more frequently, maybe than once a season. But of course, yeah, getting that right result in the rugby was crucial too. And while the Canes only won by 7 in the end, being there kind of felt like there wasn't that much concern that the Canes would lose it. But I suppose for any long-term Canes supporter, there's probably always a nervousness playing against the Crusaders, because they know they can turn it on. They know they've been on the wrong side of those ones over time. So you can never kind of fully relax anyway, being a Hurricane supporter. But yeah, it was good fun. So that was great. And then otherwise, mate, it was, winter sport, kids sports, all in full flow now. No more Sunday sleep-ins for me, with my oldest daughter now playing football on Sundays. But she had her first game basically in ever, I think, since, some sort of little football kicks when they're 5 or 6 years old. But she was amazing. So, yeah, obviously picked up plenty playing against her brother and in some early years and just, the kick arounds that we have. But that was really cool. And they got a cool team as well. So, yeah, mate, it's just really good to be back in amongst it, coaching some of the netball and football teams and, be out there, beautiful weather, crisp mornings, but nice mornings. So that was good. Had my game on Saturday afternoon. Didn't go so well again. But for anyone closer to what's going on here in the Master Divisions will know that, we're looking forward to a short early regrade season. We will sort of be put with some teams that are more our level. But yes, did have one of the guys in the opposition come and mention the podcast and say it was entertaining him. I was like, well, we've now given him entertainment from a podcast perspective, and I gave him entertainment on the football field too, because they certainly enjoyed playing against us on the weekend. So I might leave that one there. Less said, the better about that. But that'll pretty much do us for today, mate. Anything else on your mind before I wrap us up?
That's it. So another good chat.
Awesome, mate. Well, thanks as per usual for your thoughts and insights, and great to have that chat every Monday morning with you, mate. But that'll do us for today. I just want to say thanks very much for listening. Please do get in touch with any questions or feedback. Always keen to hear what's going on out there for you in your world. But that's all for today. My name is Nick. He's Kelvin. You've been listening to the New Zealand Property Market Podcast. Mā te wā.